You know, in terms of bookending the entire crisis, it's important to remember that while in aggregate we're better off today financially as a whole, certainly not everybody is.
I'm Ruth Ezel at the 2018 Economic Forecast Breakfast hosted by Commerce Bank. The featured speaker is the bank's chief economist, Scott Colbert.
The good news about housing is it can continue to make forward progress. There's a pent-up demand for housing. The bad news for housing is that interest rates are rising.
Colbert outlined just how far the nation has come economically since the beginning of the mortgage crisis and Great Recession a decade ago. That's when 9 networks facing the Mortgage Crisis Initiative connected thousands of St. Louis area homeowners to trusted resources so they could renegotiate their subprime loans in hopes of avoiding foreclosure. But in the end, across the country, more than 9 million homes were foreclosed upon, while the Great Recession claimed more than 8 million jobs. We sat down with Scott Colbert, who reflected upon the impact of the last 10 years on the banking industry, on individuals, and on moving forward.
The nice thing about St. Louis is we were largely buffeted from the last downturn, meaning that our housing prices never went crazy, and so the downside was modest. Commerce Bank at the time was about the 40th largest bank in the country, remains one of the highest credited banks in the country, and it didn't hurt to be in the central part of the country because it was the sand states and the hurricane was basically coming in from all over. So we were fairly sheltered from the boom and the bust, and I think that continues still to this day. I think in general the Missouri banks have always been pretty level-headed on a relative basis. The good news is that when you're financially disciplined and you don't have nearly the charge-offs and defaults that you used to have, then you can stay in shape. Of course, and this wasn't viewed as a problem, but of course credit was too excessive during the housing bubble, and there were literally we called them ninja loans being made, which meant you could get a loan if you had no income, no job, or verifiable assets. So that was, literally at the peak of the bubble, credit was obviously overly excessive. Today, of course, it's improving. Basically, asset values have improved, customers' cash flows have improved, so it's a little easier to find good loans to make today than it would have been back then. But Missouri's fortunate to have a very strong banking system, not only with Commerce, but some other, local banks, that worked through the crisis, exceptionally well. There were 140 million jobs prior to the recession. Today, we have 150 million jobs. And on average, the jobs are a little bit better and they're paying you a little bit more. But again, if you were the person that lost the job and haven't fully recovered, individually, there's still a lot of people still, suffering despite this second longest economic expansion we've gone through.